There's one true thing about trading, and that is that you're not going to be able to take everything that's available when the markets are going good. Okay, but if you know when to push a trade, you probably will see some of your good days turn into some really great trading days. And that said, taking a few winners and then stopping for the day, it can actually mean leaving a lot on the table on those days as well. But on the other days, it could actually mean saving a lot of money and hassle when you just get out. So how do you decide whether you're going to go on trading on that day once you've hit a certain level of profit, or just close the charts out? Before we get started, I'm going to ask you to hit like and subscribe to this channel, and any questions or comments after the video, feel free to pop them below. Now, even if you don't have a daily profit target or you don't have a set number of trades, even though we do suggest that in NetPicks, we call it the power of quitting, the chances are you're going to have to figure out how to naturally become happy with your performance. Now, you may get a gut feeling to keep pushing, and it pays off. And on occasions, you're going to make some money, and you'll also lose some money. But what usually happens is that you finish break even on the day, and your costs of trading are higher. And I'm not even going to go into the added psychological costs of concentration, the stress, and just watching your profits evaporate when you should have packed it in for the day. Now, the issues which have to be addressed in order to assess whether it's a good idea to stop or continue trading are these: market conditions turning suboptimal. Mentally, you're just shutting down. Being emotionally opposed to continuing to trade. And that I should have stopped thoughts that come to our minds after the losing trades come. So let's take a brief look at each of these issues before moving on to how to decide whether to continue your trading day. Our market conditions are turning suboptimal. So this is probably the most obvious issue when it comes to pushing yourself when you attempt to have a big day. Sometimes there's going to be some really good price movement early on due to economic reports. Sometimes there'll be market moving speakers, and that temporarily elevates the level of volatility. But when it's all over and those markets begin to crawl, if you're still trading like it was moving at 9 o'clock or 9:30, whatever market you're trading, you're going to find yourself in some trouble. The second one, mentally shutting down, and there's two aspects to this. First off is having switched off after hitting an acceptable or a good profit target. You're no longer watching the markets with the same levels of attention, and your mood very relaxed. Trading from this point on is potentially devastating if you are not careful, because you could easily turn a decent day into a big down day. Now, the other aspect is when you've already exerted a lot in terms of your effort and your emotion. Well, the same applies as with the first one, although you're less likely to want to continue to trade when you're tired. So if you're not sharp or you're not able to concentrate, your odds of trading effectively decrease significantly. What about being emotionally opposed to continuing to trade? So let's say you've had a bad run this week and now it's Friday afternoon and you're looking forward to the weekend. You want to unwind, but you made some nice profits today and you just want to bank it. Now, if you're on a bad run, one good day can reset everything for you. Take the profits, call it a day. Get onto a string of positive days and you are going to find your mental state rapidly improving. And when you're at that point and you want to stop, your emotions are heightened. Trades are less likely to be as objective. Every tick against you becomes an emotional drama. And when you have the opportunity to lessen the psychological load, you should do it. The I should have stopped syndrome. So when you wanted to, or you felt it might be a good idea to stop, but you just carried on trading and lost it all, it's really easy to beat ourselves up about it. And that's the I should have stopped syndrome. It's definitely not a good feeling, that feeling of regret. But what's worse, there's no bias to this feeling. Because whether or not you did the right thing and traded in the right way, because you felt unsure about continuing your trading day, your mind tells you that you're a bad trader. I was too greedy, or I was dumb, I carried on. They're common thoughts and they're pretty destructive. So to break out of this train of thought, it is beneficial. Go back to your trading journal. That's if you keep one, which you should be doing. Go back to that at a time when you're less stressed, when you're less tired. And it may be that your trading was poor, but even good trading that resulted in losses can feel terrible in these circumstances, right? Build good habits that are not based on the outcome of a trade. The problems are numerous when you push for that big trading day, those big profits. But if you can become skilled at identifying when to push the day, it can make a really big difference to your bottom line. So to decide on whether continuing to trade and push is the right thing to do, you have to consider what we just talked about. To work out if those conditions are good, You must not only have a firm handle on the way you monitor the markets and how they're trading, but you also ensure that you are aware of what the best conditions are for your trading strategy. It could be that it would get beat up on a day when price is trending really strong, or your strategy could be perfect for that type of market. You also have to objectively determine what your mental and your emotional state are throughout the day, and in particular, at that point where you make the decision of whether you're going to stop trading or you're going to continue on that day. You have to decide how you are going to trade if you do continue. Are you going to cut down on your position size? Will you stop if you lose half the profits you made? Will you trade all of the same setups that you have as you just did? All of these things have the potential to help protect you from that I should have stopped syndrome, that regret syndrome. Don't like those ones. But whatever you decide, right, it's got to work for you, and you have to be able to do it and be disciplined about it. Make sure you hit like, subscribe to this channel again. Any input on this, if you ever suffered from the I should have stopped syndrome, let me know below.